banking and ethics challenge that's taking place right here. It's been an interesting day. In the morning we had the semi-finals, and so the semi-finals, I have to say, with much pain in my heart that my alma mater didn't do very well. But here are the schools that went through, participated in the semi-finals. So we have the University of Ghana, we have KNUST, we have UDS, we have University of Cape Coast, we have Wisconsin University, and we have the UPSA. So these are the 6 that went into the challenge at the semi-final stage. Now, the semi-final stage is over. We're about to get into the finals, all right? And the 3 that made it to the very final stage, we have University of Ghana in the first position from the semifinals. We have UDS in the second position from the semifinals, and we have UPSA in the third position from the semifinals. So it's these 3. So we have UG, we have UDS, and we have UPSA. I think there must be something about the U in the name that's making it all work. But before we get to that, they are all getting ready and prepped up. Behind me, you can see what's happening over there. We're going to have a quick conversation. I have a gentleman and 2 lovely ladies who have joined me. They are all chartered bankers, all right? And that's the essence of what they are trying to create here. We're going to have a conversation with them and understand a bit more about who they are and why this event is happening and all of that as well. So I have right here with me Robert Jatto. He is the CEO of the Chartered Institute of Bankers. And I also have Elizabeth Tego, who is a branch manager of CBG. And if I'm right, I believe it's the American House branch, okay? And then I also have here Mamle Ahegbebu. She is a chartered banker and also the acting head of marketing for NIB. All right, so we'll be getting right into conversation with them. And Robert, let me begin with you. We're looking at the event that's happening here, but let's understand a little bit about the Chartered Institute of Bankers. Who are you, and what are some of the programs that, apart from this one that you're doing, what are some of the programs that you also organize?
So thank you very much, and good afternoon to all your viewers. So at Chartered Institute of Bankers Ghana, our mandate is a fairly straightforward one, and that is to promote the study of banking, but also regulate the practice of the banking profession in Ghana. And that mandate we have under the Chartered Institute of Bankers 2019 Act 991. People ask, what does that actually mean? For us, that means developing trusted professionals for the financial service sector. It means putting ethics, professionalism, and sustainability high on the agenda of banks and bankers. But it also means being the talent and thought leadership engine for our industry. So what we are doing today is part of our impact and thought leadership mandate. And there are a number of programs that we run. Our flagship program remains the ACIB, which is a Chartered Banker Qualification. We also have an executive leadership program called the CBEL, which is a Chartered Banker for Executive Leadership Program, targeting people at the ESCO level, the C-suite levels. We have a digital academy, specifically driving the skill set, the tool set, and the mindset that you need in a digital era. We have programs around ethics, and if you think about ethics, ethics is about doing the right thing, even when no one is watching. And so ethics is important for us. We collaborated with Bank of Ghana in creating that for the industry. We've also collaborated with a number of other partners like the IFC, part of the World Bank Group, and EPA. And we've created what we call ESG, Environmental, Social, and Governance Certification. So quite a number of things beyond the thought leadership that we do. We have our National Banking and Ethics Conference annually. We have graduation. We do other programs broadly. So at Chartered Institute of Bankers Ghana, there's always something happening, as you can see today.
You sound like you're very busy now. I'm going to come back to you and ask you about today's event itself. But let me go to Mamle and ask Mamle, if you can just talk to us a little bit about public financial education, all right, and the importance of that. This, as we are on TV right now, is a form of education that's happening. But talk to us a little bit more about that, public financial education.
Okay. Good afternoon, and good afternoon to our viewers. So public financial education is very important, okay, because it affects everyday life, our everyday life. When we understand how to save, borrow responsibly, and then we protect, it protects us from fraud. We are able to make better financial decisions, okay, in our lives. So that is where we as banking professionals come in. Okay, so we are supposed to let people understand, okay, what happens in our sector, and that is where Chartered Institute of Banking Ghana to plays that important role, okay, by coming in to educate the public individuals, and we use this, banking services rightly.
All right. Elizabeth, usually when people are in a niche space like banking, sometimes those of us who are outside find it a bit confusing with all the terminologies and the specific jargons that you have and all of that. Talk to us a little bit about the terms that you use, banking terms, like what's interest rates and treasury bills, all those kind of things. Just walk us through a bit of that.
Okay, so thank you, viewers. I would start by saying that before anybody wants to put their money in the bank, you know that when you bring the money, it doesn't just lie idle. The bank uses the money in one way or the other to make some kind of, should I say, inflows. And you who brought your money also expect some form of returns from it. So first of all, I'll start with a savings account.
Okay.
If you give us money and you put it in a savings account, then it means that you, the customer, is also looking at earning some form of interest from the money you've put on your account.
Yeah.
And so that is when interest rates come in. We'll say that interest rate is the cost of borrowing. So
Okay.
to the bank, because we have taken your money and we are working with your money, we are supposed to pay something on the monies that you've given to us. And that is what we pay to you as interest. To you, because you are earning the interest, it now becomes a gain to you. And so basically, when we talk about savings, interest rate, that's what it is.
Yeah.
And for treasury bills, we'll say that they are government securities. Anytime the government wants to raise funds for its activities, it relies on the general public. And so when it raises these funds, people come in, we call them the investors, to buy the treasury bills. And when they buy, at the end of a certain period, they earn interest rates and all of that as a gain on what they've given to the government.
All
Thank
right.
you.
Fantastic. I love that. Robert, let's talk about today's event, okay? The National Banking and Ethics Challenge. What is it? Why are we doing this? What are you aiming to solve as a result of this event?
Yeah, thanks very much. We all went to school, studied hard, and got employment, and then we get salaries. Some people go into business, run their business, and they make income. But nobody teaches us how to manage our finances. Nobody teaches us how our money can work as hard as we are working, right? And so this is part of our agenda to tackle that problem through a competition, call it a quiz called the National Banking and Ethics Challenge, by targeting university students, right? For two reasons. One, these are the people who come into the banking industry. And so it's important that they have some understanding beyond what is taught in the classroom, right? The second is that, of course, everybody has a mother, or a sister.
Yep.
And therefore, we can go back, or they can go back, students, to explain it, whether in our churches or in our homes, what these financial skills are and how we can leverage them to drive whether it's savings or investment, for prosperity. But ultimately, as an institute, we are also building the next generation of trusted bankers. And I use the word trusted with emphasis because trust comes from character. Trust comes from competence. Trust comes from conduct. And so we are molding this generation of bankers to have the ethics, which is why it's called National Banking and Ethics. So ethics is about doing the right thing even when no one is watching and having the courage to challenge the wrong thing when you see it being done. So we are focusing on that, but then also focusing on competence because the knowledge, the skills that we are building here will be very, very relevant, not just for the student, but even bankers who are listening to us right now. But we also are supporting what you call the UN Sustainable Development Goals, which is Goal 4, which is quality education. Because at Chartered Institute of Bankers Ghana, we believe we sit at the intersection between academia and industry. So we are trying to bridge that gap and ensuring that we are advancing not just financial education, but digital education, ethical literacy, and we hope that we can make sure that we all understand financial products and leverage them for prosperity.
So talk us through who took part in the challenge.
It's interesting you've asked that because last year when we started the maiden edition, and remember this is the second edition, right? The maiden edition had 5 universities. This year we have 12 universities. What does that tell you? The interest is going significantly high, and I believe that next year we'll even get bigger and better. And so those sponsors and partners who are watching out now, this is an invitation to you. But we had a number of universities participating, University of Cape Coast, you have University of Ghana, UPSA, UDS all the way from the north. Yeah. We have all nations from Kofrodia, we have Wisconsin, we have Central University, Pentecost University, just to mention a few. And I think the excitement is great, but also I see that excitement from 2 angles. One from the students themselves, but even more important, the faculty. You don't see them on stage, but they're doing a lot of hard work. And let me just say a big thank you to all the faculty members who have been supportive of the National Banking and Ethics Challenge, building the next generation of trusted bankers. And we are doing this together.
I love it. Trusted bankers. That's such an important thing. Well, ladies, let me just ask any of you. I mean, any of you can answer this. Fraud and the issue of unethical practices within the concerns that you have within the banking sector. What do you do as bankers to address this?
Okay, so as bankers, fraud is a major concern to us. Okay, because if one bank is hit with a fraud, sometimes, the implications are very high. So in order to prevent that, we put in controls. Okay, so the controls comes in by strengthening internal controls, the use of technology, especially when you have a bank that is highly digital, use a lot of digital transactions. And then we also make sure we have strong ethical standards. Okay, so as Mr. Jato said, this boils down to ethics, character. Okay, so we make sure we are coming up with professionals, we get staff who have ethical standards and would. Okay, so with all these controls together with the regulator, BOG, we make fraud. It's difficult, but we try and tighten up the space so that it doesn't occur, or even if it occurs, it's very minimal.
Elizabeth, I don't know if you have anything you want to add to that.
Okay, so for me, I'm looking at, apart from the fact that we have to be able to get our bankers, get the requisite knowledge to be ethical, like my sister said, the public have to be educated as well. Because if you have that literacy about banking and about anything financial, when you have your money in the bank and anything is happening, you know the right questions to ask. You don't sit till it is worse before you decide to go and inquire from people. And so I think that financial literacy plays an important role in helping people to even detect these things from the very beginning before it becomes worse. Thank you.
Okay. Mamle, just talk to us also about the... at this time, I have noticed that it looks like interest rates are coming down. Something is clearly going on well, to make that happen. But how does one take advantage of that at this time?
Okay, so interest rates, yes, are falling, but for us as banks, would look at the borrower's ability to pay. Okay, yes. So do you have the ability to pay? So we'd look at parameters like your income stability. Okay, are you earning that much so that you can repay this loan? Okay, we also look at your business, whatever you're taking the money for. Okay, is it viable enough? So it's not all about your interest rates falling, so banks should automatically, lend more. We look at a lot of things, a lot of KYCs play into it before, we give out loans.
Okay. All right, let's quickly just wrap this up before we go there. They are ready for us. So, wrap this up. Let's just find out who and sponsoring, who are supporting you, who's making this all happen.
Yes. So just on the back of what she said earlier on, interest rates are coming down. As an institute, we actually are part of the monetary policy. We sit there and we provide some input in terms of survey. So we expect there should be translation of that to the real economy so people can borrow. But character is important in terms of even people paying back. For us, this is really interesting, and we have APSA, we have GCB Bank, we have FIDO, we have UBA, and we have Opportunity International supporting us. But this is a program organized by Chartered Institute of Bankers Ghana, and we look forward to other partners joining us, even as it gets bigger and better next year.
Fantastic. Of course, we are doing the media partnership on this side as well. So, but we can join the event right now. It's happening there. So let's join the 2026 edition of the National Banking and Ethics Challenge final stage. It's happening now.
Innovation accelerates. Sound judgment, accountability, and integrity becomes the SETEX true anchors. This competition exists to test young minds like yours, deepen your knowledge, and embed the values that will define the banking's next chapter. To all participating universities, I offer my warmest congratulations. Your dedication reflects an appreciation of ethics as the bedrock of sustainable banking and national development. You are the leaders that we are counting on. Beyond the competition, the National Banking and Ethics Challenge serves the public. It reinforces ethical banking, strengthens trust in banks, and highlights the industry's role in Ghana's development. It is also a bridge connecting academia and practice, theory and responsibility. Tomorrow's banking will be shaped by technology and innovation, but even more by ethical foundation we lay today. Our collective task is to ensure that the next generation is as principled as proficient. To the contestants, congratulations to all of you once again. To our sponsors and partners, thank you very much. Your support brings National Banking and Ethics Challenge to life and represents a meaningful investment in Ghana's financial future. One we do not take for granted at all. Thank you. CIB Ghana has set the stage for the next one in 2027, and we call on all partners to support this all-important initiative. May the good Lord bless all of you, and I wish the winner all the best. Every participating university, I wish you all the best. And I'm hoping, I have one in mind. I believe they will. Thank you very much. Okay.
Okay, thank you very much, Mr. Benjamin Amenume. He's the president of Chartered Institute of Bankers Ghana. Thank you very much. Okay, so I'll hand over to our quiz mistress and starting.
Heard the president of the Chartered Institute of Bankers Ghana giving his speech there, and we're still here having this conversation as they get ready to start the final. Let me just ask you again, what's at stake for the winners of this event?
Well, thank you very much. So, let me use the opportunity to thank all our sponsors, including Channel One, of course. They've supported us. So there's a trophy to be won. That's the ultimate. But we're also offering scholarships to the winning team. And they get a full scholarship to pursue the chartered banker qualification. We also have arranged, thanks to GCB Bank, internship program for all the contestants, so they have the opportunity to intern with GCB Bank. We also have, of course, certificates for all the participating students. We are waiving registration fee for all participants here. And for us, that is really, really good. And I'm hoping that you can register and become a chartered banker. So, but honestly, I think there's a lot more support we are giving the faculty members as well. We know that by reason of what they've done, they have some qualifications. We give them exemptions, and the institute would absorb the cost of that exemption so that we can build capacity in the banking and finance faculties across our universities. So quite a lot at stake.
So you said something very interesting, which I'm sure will pique the interest of a lot of people who are watching. I don't have a finance background. I don't have a banking background. There's nothing in my background or experience that has anything to do with, the institute, finance or banking. I did biochem in KNUST. I've done media and other things up to this point. How can I register and become a chartered banker?
You know, it's interesting you've said that about 99% of our intakes are actually people with first degree, and that first degree can come from any background, right? If you go to the banking industry, you have quite a number of people with different backgrounds who are working in the industry. Okay, so the background doesn't matter. It's what you go through here, which is why we have level 1, level 2, level 3, level 4. And if you have a relevant background, then of course that qualifies you for some exemptions. So you have, we credit you for previous knowledge, right? So it's really everybody. And think about the value of the qualification, because think about it, we need bankers in Parliament, in the Parliament of Ghana, because that's where all the loans get approved. Who approves loans? Bankers, right? Go to our churches, they do collections, and that's where banking happens. Go to MTN, they do more payments and transactions. Go to the fintech. So we're actually developing people with different backgrounds to go support the real economy of our country. And even if you are running your own business, understanding your relationship, the customer-banker relationship is very important. How you deal with your bank is crucially important. And as we go on the back of African Continental Free Trade Area, Ghanaians will be doing things across the sub-region. Your understanding of the banking system, the regulatory frameworks will be crucially important.
All right. Let me ask you, Elizabeth, how do we improve the perception, public perception of bankers, you know?
I think that basically, let me start from this area where I'll say that we all have this PTSD in the banking sector because of the banking sector cleanup. And so everybody has some form of trauma when it comes to banking and all of that. I think that to improve what people already know, the challenges that people are already facing, first of all, we've already spoken about financial literacy. And now I'll say that the economy makes it a bit easier when we started with this interest rate for people to come in and take in loans to, make their businesses better.
Yeah.
And so in some regard, I would say that if everything is okay, or if your business falls in that category where you have almost everything that is required of you, you should be able to access a facility or any other credits that you need.
All right. So the quiz mistress is ready with her contestants, and so we're going to cross over and join them right now.
Jamna, level 400, banking and finance.
Okay, welcome. Alfred, what's in Japan? Banking and finance, final year. Okay. Thank you. Yes, so now UPS. Let's know the 3 champions representing UPS. Go ahead.
Darko Richibon, level 200 student, offering BS in banking and finance.
Wow, welcome. Yes.
I'm Felix Amate Lai, final year, banking and finance.
Okay.
Trasam Justice Tete, BSc Banking and Finance, final year.
Okay. Let's give them a clap. Okay. Now UDS.
I'm John Paul, final year banking and finance student.
I'm Ibrahim Salim, final year banking and finance.
Okay.
I'm Nimo Michael J, banking and finance, final year.
All right. Let's clap for that. So once again, these are our champions that have made it to the finals. I'm sad there's no lady on the stage. I'm sad. Okay, so Madam MC, we are waiting for you. Okay, so we can go ahead and start. Okay, so this is the final. Okay, so in this round, you are still going to have 3 major questions to answer. So any question that you answer correctly is 5 points, but here there are no bonus. So we are not going to pass any question around. You have 60 seconds within which to give an answer with only 1 attempt. This is final. Only 1 attempt, 60 seconds for 5 marks. So we are going to start the first level. When we move to the second level, I'll give you the instructions or the rules. So these are the simple rules for level 1, round 1. So this afternoon, we start with questions on capital adequacy, ratios, and risk. What are capital adequacy ratio? Okay, so to everyone, I'm not asking the question. You listen to me. I'm just explaining what it is so that our audience who are not bankers like us can understand. So that's a ratio that the regulator has set for all banks, okay? And that's what shows the bank safety cushion. Because banks are into giving out loans, we have to make sure that at any point in time, the bank has enough capital. So in simple terms, you can say it just shows the bank safety cushion to be sure that as they go about giving loans or credit to customers, they are well capitalized. So that is what it means. So we'll be asking you questions on this, and we expect that you apply the knowledge on even the formula or what it means to answer your question. So, with that out of the way, I will start with University of Ghana. Your question is, a bank reports a strong capital adequacy ratio, well above the regulatory minimum. However, further analysis reveals that a significant portion of its capital base is composed of subordinated debt and other Tier 2 capital instruments rather than core equity. Evaluate the implications of this capital structure for the bank's financial strength and resilience. I'll take the question again. A bank reports a strong capital adequacy ratio, well above the regulatory minimum. However, further analysis reveals that a significant portion of its capital base is composed of subordinated debt and other Tier 2 capital instruments rather than core equity. evaluate the implications of this capital structure for the bank's financial strength and resilience. You have 60 questions to give me an answer.
Okay, so the fact that the bank is, has significant subordinated debt and tier 2 capital raises issues in the fact that the regulator normally looks at the tier 1 capital, which relates to the fact that the bank will be able to absorb losses and continue operation. But the fact that the bank's capital adequacy ratio is highly composed of subordinated debt and tier 2 capital implies that the bank would not be able to, will not have a strong buffer to be able to absorb losses while continuing operations.
Okay. So, a high capital adequacy, yes, is mainly driven by tier 2 capital, okay? That makes it look like you are well capitalized. But it's weaker, okay, potentially limiting its ability to absorb losses effectively. So, okay. So in this case, yes, you're able to explain that it looks as if it's good, but it doesn't look too good. So you get 5 marks. UPS. A bank reports a capital adequacy ratio significantly above the regulatory requirement, indicating strong capitalization. However, it begins to experience severe liquidity pressure after an unexpected surge in customers' withdrawals. Explain why a bank with a strong capital adequacy ratio may still face liquidity challenges. I'll take the question again. A bank reports a capital adequacy ratio significantly above the regulatory requirement, indicating strong capitalization. However, it begins to experience severe liquidity pressure after an unexpected surge in customer withdrawals. Explain why a bank with a strong capital adequacy ratio may still face liquidity challenges.
So, although the bank is having a high capital adequacy ratio, they may face liquidity challenge because of the high number of customers coming for the withdrawal. That is a bank run. So at the moment, the availability of cash to honor customers' needs in their vault may be a problem.
And also, liquidity risk might be an issue to the bank if their capital adequacy ratio is of much or too much of the tier 2 capital than the tier 1 capital.
Okay. So, what I was expecting was for you to clearly let me know the difference between the kind of risks that the capital adequacy is measuring, which are long-term here. But liquidity is immediate to be able to, and you could not explain that. So you couldn't really explain it well. I'll give you 2 out of 5. Question 3, UPS. A bank reports an improvement in its capital adequacy ratio over the year. Further analysis shows that this improvement was achieved mainly by reducing high-risk assets and lowering its risk-weighted assets rather than by raising additional capital. Explain the effectiveness and sustainability of this strategy in strengthening the bank's overall financial position. A bank reports an improvement in its capital adequacy ratio over the year. Further analysis showed that this improvement was achieved mainly by reducing high-risk assets and lowering its risk-weighted assets rather than increasing the additional capital. Explain the effectiveness and sustainability of the strategy in strengthening the bank's overall financial position.
So improving capital adequacy ratio through reducing high-risk assets and lowering risk-weighted assets reduces the bank's exposure to default, and then will enable the bank to operate efficiently without being scrutinized by the regulator.
Okay, so on the face of it, like you explained, once they've been able to reduce their risk-weighted assets, yes, that will definitely reduce their risk around the loan. So you mentioned reducing their risky loans, right? So that is just on the face of it. But what I was expecting is that you have to tell us that on the long term, it's limited, okay? Because really to improve your capital adequacy ratio, the concentration should be on the capital. So you explain part of it, and you left the other. So I'll give you also 2 out of 5. Okay. So moving on, we'll be answering questions on credit analysis and appraisal. As bankers, before we give any customer a loan, we go through a process to check if it's a credit-worthy customer, take a lot of documents, ask a lot of questions to analyze it before we finally decide that this customer, you are worth giving the loan or not. So we'll be asking some questions on this. I'll start with UDS. Your question. Are you ready? UDS, I'm here. Are you? Okay. So, a company reports strong profit, but consistently struggles to meet its loan repayment obligations. Explain why profitability may not translate into repayment capacity. A company reports strong profit, but consistently struggles to meet its loan repayment. Explain why profitability may not translate into repayment capacity.
Okay, this may be as a result of maybe the company is giving high dividends and retaining earnings, which may not necessarily give them the chance to pay their loans.
I want to give you opportunity to say the answer again. Say it again. Say the same thing.
So, I mean, the profit that they have may not necessarily be used to repay their loan because they are maybe giving high dividends. They are declaring high dividends and also retaining the profits into to expand their operations.
Okay, so that's not the answer. It's incorrect. And as banking and finance student, the first thing that we always need to know about profits is that it's an accounting measure. It doesn't necessarily mean that you have cash, you see. So this is incorrect. 0 for UDS. Now, UPSA, your question. A borrower has a debt service coverage ratio of 0.9x, but argues that future contracts will improve cash flow. Explain whether the loan should be approved and justify your decision from a credit risk perspective. I'm reading the question again. A borrower has a debt service coverage ratio of 0.9x, but argues that future contracts will improve cash flows. Explain whether the loan should be approved and justify your decision from a credit risk perspective.
From the credit analysis, immediately the loan should not be approved. One, because the customer may not be able to pay the loan back based on its debt cover ratio. But in a future contract, they should analyze or they should evaluate that contract based on the cash flow from that contract. If the cash flow from that contract ahead is favorable, then they based on the cash flow, they can consider that.
Okay, so we'll give full marks to UPSA because debt service coverage ratio of 0.9 is not sufficient. So we don't give or approve that loan. So now, UG, your question. A borrower applies for a loan and offers high value collateral that exceeds the loan amount. However, an assessment of the borrower's financials reveals weak and unstable cash flows, raising concerns about the ability to service the loan. Evaluate whether the availability of strong collateral is sufficient to justify loan approval, and discuss the key credit risk considerations the bank should take into account. Again, a borrower applies for a loan and offers high-value collateral that exceeds the loan amount. However, an assessment of the borrower's financials reveals weak and unstable cash flows, raising concerns about the ability to service the loan. Evaluate whether the availability of strong collateral is sufficient to justify loan approval. Discuss the key credit risk considerations the bank should take into account.
So the collateral is not sufficient for the approval of the loan. This is because on the premise of us employing the 5C's credit analysis tool, collateral is just one of them. And if he fails in meeting the other four, it will not be sufficient. Also, the collateral might not be liquid, which means that even though it's high value, when it is time for you to convert it into cash, it might be a problem, and hence, it's not enough justification for you to convert it.
Thank you. Well done. Okay, so we've come to level 3 on under round 1. And here we'll be answering questions on cybersecurity. Okay. So, UG, your first question. Social engineering. Hold it. Okay, so I start again. Okay, I start again. A bank outsources its mobile banking platform to an external vendor. A breach occurs at the vendor level, exposing customer data. Who bears responsibility, and what risk does this illustrate? A bank outsources its mobile banking platform to an external vendor. A breach occurs at the vendor level, exposing customer data. Who bears responsibility, and what risks does this illustrate?
The bank bears the liability because the primary contractual relationship is between the bank and the customer, and not necessarily whoever the bank has outsourced its mobile platform to. The risks at play are the potential breach of violations of regulations, and also data privacy concerns for the customer, and also regulatory, following the law and under the Data Protection Act, and breaching breaching customer data privacy and professional.
Okay, so you got the part where the bank is responsible because it's a customer-banker relationship. As for a vendor that you are using, it doesn't come in here. So you got that part. Yes, you try to mention some risks that the bank faces because of this breach, which on the regulatory and all of it. But I also wanted to hear about third-party vendor risk because the main issue was on the vendor side. So because of that, I give you 3 out of 5. Okay, UPS. A bank's digital platform experiences frequent downtime, preventing customers from accessing services. What are the key risks arising from this situation? A bank's digital platform experiences frequent downtimes, preventing customers from accessing services. What are the key risks arising from this situation?
Okay, the risk that the bank is likely to face is 1, reputational risk. where the customers may not be able to access make transactions, so it will reduce trust. The second is compliance risks, because it's required for them to ensure that their digital platform is up to date with security. Then operational risks, when customers are not able to
Correct for 5 points, UPSC. Correct. Okay. And as all banks are moving into digital banking, all banks are supposed to take note to make sure that systems are always reliable. Yes, because of the risk that UPS has given us. So reliability is very critical in digital banking. So now, UDS, your question. As an IT administrator with privileged access, extract sensitive customer data and sells it externally, what type of cyber risk does this represent, and why is it significant? As an IT administrator with privileged access, extracts sensitive customer data and sells it externally, what type of cyber risk does this represent, and why is it significant?
So the risk is insider fraud, and its significance is that it violates the Data Protection Act, which may lead to compliance risks and also liabilities to the bank, and also violates the ethical standards.
All right, that's correct. Insider threat risk, it's prevailing here. Okay, so this brings us to the end of round 1. You were saying that after this one. Hello? All right, we've come to the time for us to account for our answers. All right, so at the end of round 1, University of Ghana, 13 points. University of Professional Studies, 12 points. University for Development Studies, 7 points. Congratulations to all of you. So at this point, we'll move to the second level in this round. You know what? Let it face. Let it face them. How many minutes? doing 15 minutes. And then the max is the same 15. We're also giving them 15. No, why are the questions? So then you have to give them questions. So these are the case studies. This is the question. One, two. You can go and give it to them. Just give it to them. Give it to me. Okay. Our finalists, listen to the instructions on this. So in this segment, you've all been given a copy of a case study, right? You're going to you spend 15 minutes, and the total max is 15 marks for this. And this is what we'll be doing in round 2. So here, you all have sheets? Okay, but you are going to present on the flip chart. So you can all come here, come with your question. You can at least flip over so that we know we are all starting at the same. Come with your question. You can position it anyhow that you want. Okay, so you can flip over. Okay, so we all flip over. So let me read the question here. The case study is the rise and collapse of Meridian Trust Bank. Meridian Trust Bank was once ranked among the top 5 banks in the country, widely recognized for its rapid growth, strong profitability, and expanding market share. Within a decade, MTB transformed from a mid-tier institution into a dominant player, attracting large corporate clients, government-related contracts, and high-net-worth individuals. The bank consistently reported high profitability, robust loan growth, competitive returns to shareholders. Its leadership was celebrated for being aggressive, innovative, and commercially driven. Under their growth strategy, MTB pursued an aggressive expansion strategy by rapidly increasing its loan portfolio, concentrating lending in high-yield sectors such as construction, energy, and trading, relaxing credit appraisal standards to win market share. Many loans were approved based on optimistic projections rather than verified cash flows, weak due diligence, and limited stress testing. The bank's financial statements showed strong profits year after year, driven by high-interest lending, large ticket corporate facilities. However, internally, a growing number of loans were being restructured or evergreened. Non-performing loans were underreported. Profitability was increasingly artificial and unsustainable. Investigations later revealed that significant loans were extended to companies linked to directors and senior executives. Some facilities lacked proper documentation or adequate collateral. Credit approvals were influenced by conflict of interest and internal pressure. MTB had large exposures to a few interconnected corporate groups, business dependent on government contracts. When these counterparties began to face financial difficulties, loan repayments slowed, defaults increased rapidly. The bank's exposure was highly concentrated and vulnerable. Rumors began to circulate about insider dealings, delayed payments to depositors, weak financial health. This triggered increased withdrawals, difficulty accessing interbank funding. Now the collapse. Within a short period, liquidity pressures intensified. Hidden non-performing loans surfaced. Capital was eroded due to massive provisioning requirement. Despite previously strong financial ratios, MTB was unable to withstand the shock. The regulator intervened and declared the bank insolvent, revoked its license, initiated resolution measures to protect depositors. You are required to, 1, list any 4 primary root causes of MTB's collapse, and I'll give you 2 marks. List any 4 unethical practices associated with the bank's practices. List any 4 risks associated with MTB. Briefly explain how any 4 unethical lending practices contributed to the collapse of the bank. Then the final question, explain how reputational risk is translated into liquidity risk. So, this is your question. Wait, before we start, are we okay? You have, all of you have your pens? Have your pens, okay. So, are you comfortable showing what you are writing, or you want to? Yeah, they don't want to show until they are done. So let's allow them. Okay. So, Mr. Timer, you can start work. 15 minutes.
We are the future, we are the change. Banking with purpose, knowledge we gain. Standing for ethics, firm and strong. Yeah. Doing what's right where we belong. Yeah. MBC, we rise, we lead. Excellence is what we breathe. CIB Ghana, yeah, our core. Integrity above it all. We are the future, we are the change. We are the future, we are the change. Banking with purpose, knowledge we gain. Knowledge we gain. Yeah. We are the future, we are the change. We are the future, we are the change. Banking with purpose, knowledge we gain. Hey! We are the future, we are the future, we are the future, we are the change. We are the future, we are the future, we are the future, we are the change. We are the future, we are the future, we are the future, we are the future, we are the, we are the, we are the, we are the, we are the future, 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 we are the future. We are the future, 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 we are the future. We are the future, 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 we are the, we are the, we are the future, 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 We are the change. Banking with purpose, knowledge we gain. Standing for ethics, firm and strong. Yeah. Doing what's right where we belong. Yeah. NBC, we rise, we lead. Excellence is what we breathe. CIB, Ghana, integrity above it all. We are the future, we are the change. We are the future, we are the change. Thinking with purpose, knowledge we gain. Knowledge we gain. Yeah. We are the future, we are the change. We are the future, we are the change.
We have less than 2 minutes.
Knowledge we gain. We are the future, we are the future, we are the future, we are the change. We are the future, we are the future, we are the future, we are the change. We are the future, we are the future, we are the future, we are the future, we are the, we are the, we are the, we are the, we are the future, 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 we are the future. We are the future, 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 we are the future.
Okay,
We are
time
the
is
future.
up.
We are the future.
Time is up.
We are the future. We are the future.
Okay, so time is up, but yes, I'm the quiz mistress. I want to find out from you. Should I give you 5 more minutes? Or if all 3 of you agree? Do you agree? UDS, do you want 5 more minutes to continue? Yes or no? Do you want 5 more minutes to continue? No. Okay. Then time is up. All right, so you can, please, pens down, pens down. Time is up. Okay, so my panel of judges, please, you can come for the answers. So we continue.
We are the future. We are the change. Banking with purpose. Knowledge we gain. Standing for ethics. Firm and strong. Doing what's right. Where we belong. NBC. We rise. We lead. Excellence is what we breathe. CIB Ghana. Our call. Integrity above it all. Learning to lead, learning to lead, learning to serve, building the skills, the world deserves. Truth in our actions, clear and bright, guided by values, doing it right. We rise, we lead. Excellence is what we breathe.
Hello. All right, so we are going to continue the contest into the final round as our panel of judges go through and mark your second round or second level answers. So, okay, so you need papers, right? Okay. let me, okay, take. Yeah, yeah, okay. You can have it. You need another one? You can have it. Okay, so in this round, it's either true or false, and that means we cannot pass it to the next. Each correct answer is 3 marks, and you have only 30 seconds to answer the question. So you give it to me straight. True, false, either true or false. So we start with the University of Ghana. And these set of questions will be on digital banking. So, UG, your first question. Digital banking channels eliminate the risk of delayed transaction processing. I'll read the question twice. Digital banking channels eliminate all risk of delayed transaction processing. Okay. I'll read it again because I think the second one sounded a bit different. So, digital banking channels eliminate all risk of delayed transaction processing. True or false?
False.
False. That's correct for 3 marks. University of Professional Studies. High transaction volumes in digital banking always indicate improved bank performance. Again, high transaction volumes in digital banking always indicate improved bank performance. True or false?
It's false.
False, that's also correct. UDS. A bank that achieves 100% digital transaction processing does not automatically eliminate operational risk. A bank that achieves 100% digital transaction processing does not automatically eliminate operational risk. True or false?
True.
True. Okay. Okay, so that's the first level for our true or false. Now I will move on to the second level, which is on financial statements. And here too, I need either true or false. So I start with UDS this time. A bank with high interest income automatically has high overall profitability. A bank with high interest income automatically has high overall profitability. True or false?
False.
False, that's correct. UPS. Trading income is considered non-interest income. Trading income is considered non-interest income. True or false?
True.
True, that's correct. UG. Loan loss provisions are recorded as part of operating expenses. Loan loss provisions are recorded as part of operating expenses. True or false?
True.
It's false. Okay, so we move to the final level on our true or false section, and this is going to be on the balance sheet. Okay, balance sheet. So, okay. Okay, so with this one, the first question goes to UG. An increase in customer deposit automatically improves a bank's capital position. An increase in customers' deposits automatically improves a bank's capital position. True or false?
False.
Yes, that's correct. UPS. A bank can appear well capitalized even if a large portion of its assets are non-performing. A bank can appear well capitalized even if a large portion of its assets are non-performing. True or false?
False.
Nope, it's true. Now, UDS. UDS, your question. Loan, hello. All right, let's allow UDS to listen and answer their final question. So, loan loss provisions reduce the value of assets on the balance sheet. Loan loss provisions reduce the value of assets on the balance sheet. True or false?
False.
Nope. Because certainly if the customers are not paying for it, it leaves your asset book. So it's true. So this brings us to the end of they got it wrong. Hello? Okay, so results for the final round is ready, so I'll share that with you. That's a true or false. So University of Ghana had these are our Okay, so for the third round, University of Ghana had 6 points. UPS 6 points, and then UDS 3 points. Hey, what's wrong with you? No.
We are the future, we are the change. We are the future, we are the change. Thinking with purpose, knowledge we gain. We are the future, we are the future, we are the future, we are the change. We are the future. 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 We are the future.
Okay, hello. So for the sake of fairness, we are going to have a replay of the last true or false segment because UDS is contesting the announced results. So we can all pay attention as we replay so that we know exactly how many they got right. All right, so please go ahead and play. And all council members and fellows, you are all part of the panel of judges now. So I'm counting on you. Please go ahead and play. So let's go. Second question was on the question. Risk associated. Risk associated. No, the second question is what? Ethical. On ethical. Okay, so the key management. Key management, we are following. Okay, the key management. Then lack of reporting and financial breach. Okay, so this is also. Then loan approval. Influenced by conflict of interest. Okay, so these are all connected. So 1.5. Okay. So that one too. And here too, I need either true or false. So I start with UDS this time. A bank with high interest income automatically has high overall profitability. A bank with high interest income automatically has high overall profitability. True or false? Do we have any other batteries? False. False, that's correct. UPS. Trading income is considered non-interest income. Trading income is considered non-interest income. True or false?
True.
True, that's correct. UG. Loan loss provisions are recorded as part of operating expenses. Loan loss provisions are recorded as part of operating expenses. True or false?
True.
It's false. Okay, so we move to the final level on our true or false section, and this is going to be on the balance sheet. Okay, balance sheet. So, okay, so with this one, the first question goes to UG. An increase in customer deposit automatically improves a bank's capital position. An increase in customers' deposit automatically improves a bank's capital position. True or false?
False.
Yes, that's correct. UPS. A bank can appear well capitalized even if a large portion of its assets are non-performing. A bank can appear well capitalized even if a large portion of its assets are non-performing. True or false?
False.
Nope, it's now UDS. UDS. Your question. Loan, hello. All right, let's allow UDS to listen and answer their final question. So, loan loss provisions reduce the value of assets on the balance sheet. Loan loss provisions reduce the value of assets on the balance sheet. True or false?
False.
Nope. Because certainly if the customers are not paying for it, it leaves your asset book. So it's true. They will still get the force. So what the total max is? So they got 2/2. Okay. Then, second one here then. Unethical. That one to how many? 4. The same, yes. 4. 2 marks. 4 points for 2 marks. Okay. So then number 2, unethical, abuse of office. That's it.
we are the change. Banking with purpose, knowledge we gain. Standing for ethics, firm and strong. Yeah. Doing what's right, where we belong. Yeah. MBC, we rise, we lead. Excellence is what we breathe. CIB Ghana, yeah, our call. Integrity above it all. We are the future, we are the change. We are the future, we are the change. Banking with purpose, knowledge we gain. Knowledge we gain. Yeah. We are the future, we are the change. We are the future, we are the change. Banking with purpose, knowledge we gain. Hey! We are the future, we are the future, we are the future, we are the change. We are the future, we are the future, we are the future, we are the change. We are the future, we are the future, we are the future, we are the future, we are the, we are the, we are the, we are the, we are the future, 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 we are the future. We are the future, 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 we are the
All right, so we're still here. The quiz competition is nearing its very end. The final round has happened. The answers and various results are being collated as we speak. But I'm still here with Robert and let's find out how things are going on his end so far. So, as far as you're concerned, how has it been, and what's holding up the results?
So far, as you can see, it's been quite intense, and a number of the participants are quite excited. They are supporters, right? And we want to get everything right. So the problem of the day, or part of the problem of the day, is being currently assessed, and we'll come up with the result pretty shortly. But overall, I think as an institute, we are achieving the objective for which we are running the National Banking and Ethics Challenge. It is a public education on financial sector, but also building the next generation of trusted professionals. We are putting ethics high on the agenda, digital literacy. So if you look at the questions cut across everyday banking, the things that you and I would face when we go to the bank. So we do hope that we have made some progress in terms of public awareness, in terms of what banks do.
Now, Elizabeth, let's talk about the need and importance of a professional qualification for bankers, right? Why is it important?
Okay, so I'll start from, I think when we started this discussion, you asked Mr. Jato whether you could get a certification if you didn't do any form of banking or business course. And he told you that, you see now when you get into the banking industry. You have people who did biochem, did sciences
Yep.
that still find themselves in the banking terrain.
You are mentioning biochem like you have something against me.
No, please, not at all. And so I would say that I forgot the question.
No, so I mean the need for professional qualification, right?
So, like I was saying, we have a lot of these people in the industry. And one of the things I noticed when I started in the banking field was that it is easy for you to learn the routine. When I say the routine, when you come to the banking hall and we are serving customers, we have the systems, the core banking application that helps us to be able to input your transactions and process it for you. Anybody and any person can do that. If you pick somebody from the secondary school, they can do that. However, when we move from the routine to understanding the main laws behind banking, the practice of banking, like we are talking about credits, somebody spoke about the 5 C's of credit and all of.
Okay.
You need to really understand this from an education point where CIB comes in, that they give you the professional touch that you need.
Okay.
You have that ethical background that you are also being taught to be able to understand the laws behind what you are doing and not just the routine. And so with this, I feel that it is very important not for those of us who are already in the system to know just the routine, but to know the laws that back what we are doing and to be able to do it well. That's why I think that we need that education from CIB.
And you wanted to add?
Just add to that. You know, if you and I were to go to Kolebu right now, sitting there, one has gone to medical. It's licensed by the GMA. And most important is conduct of the medical profession. But it's another who didn't go to medical school, maybe has some other degrees, and is practicing medicine, doesn't subscribe to any code of conduct, is not held accountable. Now, if you think medicine is risky, think about the banking profession. When we get it wrong, DDP happens. When we get it wrong, banking sector cleanup happens. Banking is actually, in my view, some products wrapped within risk management and customer centricity, right? And so risk management is crucially important. And when we get it wrong, people lose their jobs, people lose their monies, their deposits. And that's why a medical doctor makes a mistake, and a banker makes mistakes, or finance managers of our economy make mistakes. Pensioners lose their funds, right? And so it's crucially important that maybe in the past, professional qualification in terms of the banking sector, we didn't insist on it. But going forward, we must, because it's important that you work hard for your money. The person taking care of that money for you must be trusted, must have the competencies, and must also be held accountable in the event they get it wrong. You know, which is why the professional banking education is very, very important. Being a member of a profession means that you are subscribing to the code of ethics of that profession. You can also be held accountable if you get it wrong. That's why I'm in this role on a daily basis.
So let's look at the event today. Now, post this event, what are your aspirations for the challenge, the National Banking and Ethics Challenge for the future? What are some of your aspirations?
Sure. So first of all, we want to make sure that we take it to the next level in the number of university participating, in terms of the sponsorship that we will get. And thank you to Channel One for being a partner in this. But also in terms of how do we even improve the quality, make it even more competitive, but importantly, dial up the public education element. You know, we are building a pipeline of chartered bankers. Remember those reading banking and finance, somehow they'll end up in parliament. And if there's a place where we need more chartered bankers, maybe it's parliament, but that's where the loans get approved, right? But our churches, you know, what about, you know, we need to build this momentum, not just in terms of participation, not just in terms of but also in terms of the impact. can we take this to the judiciary, for example, or lands commission, or any other place where understanding of the financial system is crucially important. So we'll be looking forward to working with different stakeholders, both local and international media partners, to really take this to the next level.
So, Elizabeth, a lot of people are watching. Bankers are here. We're talking about banking and all that. Just talk a little bit also about the importance of a good customer experience for bankers to take that into consideration. You know, to give their customers a good customer experience. And what should customers expect from a good bank?
So first of all, I would say that any person who walks into a banking hall has that right to carve their own perception about a business, or let's say the bank. And so it is not what you think you have available to sell to the customer that will meet the customer's need. The customer has to experience something that makes them satisfied or delighted. That is where we say the customer has gotten an experience that they can carve their perception around. And so as much as possible, I would say that for the banks, let's make sure that we are going the extra mile. We are not just staying at wanting to just have products and do things that is going to sell to our customers. We have to be able to get to that point where they can experience something that they will have a lasting perception about. They will be loyal to the bank, and that at any point in time, if anybody makes inquiry about a certain service, the first thought that comes into their mind is their perception or the impression they picked about a particular place they gained a service. Thank you.
Okay. So with the program that's here, let's talk a bit more about getting people on board to come and take the courses here. How long is the course? How long does it take for you to become a chartered banker?
That's a great question. So there are different routes to becoming a chartered banker, and the background with which, or previous qualification with which you come, also determines what exemptions you get. So it's possible that someone read banking and finance, and if we look at the transcript of that person, he's covered quite a number of other things. We could exempt that person. I know people who take 18 months, some 1 year, but that's on the regular chartered banker program, level 1, level 2, level 3, and then the level 4. But even more importantly, we have what we call the Chartered Banker for Executive Leadership Program, which is 6 months. By targeting people who have 15 years experience in the banking industry but have senior level experience of not less than 5 years. They take 6 months to do that. We also have the branch CEO program, and that branch CEO program is designed to address middle management to those next in line to becoming ESCO or key management people. And so again, that's 18 months. So as you can see, there are varied routes to get into the same destination, but the value is not compromised, and that's very, very important, because if it takes someone fresh from university and that person does level 1, level 2, level 3, level 4, it's not the same as someone who has done 15 years at the central bank or 15 years in a commercial but a key management position. So we are not doing one size fits all. We are innovating around the rules to becoming a chartered banker. So it could be anything from 6 months to 18 months. Some people take much longer. Remember, there are people who are working, they have families, may have other responsibilities. So we create different routes to suit different demographics.
So let's take me, for example, because I want to try and make it as practical as possible. So I don't have any finance background. I don't have any banking background. I probably haven't done any courses that I will be exempt, if I'm coming to the course. So I'm going to do everything, and I want to go all the way to level 4. Typically, how long will that take me? And in terms of the time sacrifice, how much time would I have to invest to make that happen?
All right, so think about it this way. There are 4 levels. We write exams twice a year. So if you clear 2 levels in a year and clear another 2 levels, that's 2 years maximum, right? But that depends on you. Of course, David, you are working. You have other responsibilities. Your full-time work is not studies. If you take someone in the university, the person's full-time work is studies, right? So, but of course, you have experience which you can apply. And so, like I said, it depends on you. I know people who take 5 years, just because they have other responsibilities. I know people who take 2 years or 1 year. It just depends on you and how serious, how determined you are as well. Remember, this is a professional qualification. It's not something you get on silver platter. Of course, you have to put in the effort. But I can assure you that the people who pass it, they don't have 4 heads, 5 eyes, 2 noses. They are just like you and I, regular people. Yeah.
All right, let's go back to the banking hall. Somebody comes to complain about a fraud situation. What's your instinct normally? Have you ever found a situation where somebody's complaining about a fraud situation, but it appears that after investigation it was their own fault? What do you do?
Okay. So this happens sometimes, but then in that situation we don't leave the customer because you have to manage the customer, I will say. And in managing the customer, apart from the fact that we try to console you, we also have to educate you, because most of the times I realize that people who fall in these kind of traps either do not have an education about something or there's something lacking. And so we try to give them some form of education, and also, as soon as possible, find a way to even reduce, let me say, the possible loss. So if somebody complains about, let's say, money is lost in the account and it's as a result of, let's say, a card use, immediately we have the complaints portal where we complain it immediately. Then the card is being blocked so that further transactions cannot go ahead. Then when we are done, we can now have conversations with the customer and advise them as to what to do in the future.
All right, let's come back to the issue of ethics, because at the end of the day, I tend to find that the space in which we live, we are huge on laws and not so much on ethics.
Yeah.
Talk to us about how we can seek to address it, and I'll pick your thoughts on that as well.
Sure. So, see, ethics goes beyond the law. Something may be right by law, but does not make it ethical. If you look at yourself and just put yourself on the other side, the receiving end, how would you feel? So for me, ethics is about doing the right thing, even when no one is watching. And there are areas where there are no laws, so there are gray areas, and you may face some ethical dilemmas. Truth is that if on a Sunday morning, a man wakes up, wears white, and said, I won't commit any crime, but he jumps into a car that he cannot drive, he may crash and he may kill people. But if he goes into that car, however good conscience he may be, or he may, whatever his good conscience of, he may even have the competencies. If there are no traffic lights, he will crash into someone. But what if he has good conscience, which is ethical, he's competent, that he can drive the car, there are traffic lights, i.e. regulation, and yet there's no accountability? More people will die. So for me, it's about ethics, making sure that we implement the laws. But where there are no laws, ethics will be crucially important, because it's about doing the right thing, even when no one is watching, but also having the courage to challenge the wrong thing when you see one being done. And there are different ethical dilemmas that we face, whether you are in journalism or in banking. Having a framework within which to make that judgment, whether it's on virtue ethics or some duty ethics, it's important that as a country we have some values and frameworks that guide us. And most importantly, we must give voice to values. And for me, that's where the conversation starts, whether it's in parliament or in judiciary or in banking, wherever we are, or even in the churches. We all need to be conscious and aware of what is right versus what is wrong, and in what context, and if we were at the receiving end, how would we feel about it? For me, it's something that we all have to pay attention to.
A lot of the time, people will tell you that, oh, prove it. What's the evidence? I didn't do anything wrong. But if you're talking ethics, we're talking about higher ideals beyond whether it was lawful or unlawful. What's your take on it?
Okay, so I say that banking is evolving. I say it's evolving because previously there was nothing like fintech or sustainability banking, and now we see that it's very prevalent in our industry. And I realize that as these things come up, as new things come up, sometimes it takes time for us to be able to even start couching products and certain things around it. But then as we go on, and let's say the regulator builds certain laws and certain policies around it, then we are able to know that this is how we are supposed to go about it. However, in the absence of it, like Mr. Jato said, what is right and what is not right. Once you have that at the back of your mind, you will be able to press the brakes even before there's a certain policy around it. Then you'll be able to know. I remember when crypto came, a lot of people had already gotten into it, and at a point, Bank of Ghana from the beginning did not really want to get themselves involved in it. And right now, as we speak, Bank of Ghana has taken up that responsibility because it started spreading so fast. And I'll say that if you were a banker before and you probably knew about crypto, you should be able to press the brakes because you have an ethical background, something that gives you that conscience to know, is this right for me to get into it or not? Even before Bank of Ghana comes in. So that's it for me.
If I may just add, as she said, technology is evolving very fast. Today, customer data is an asset, so someone uses not just your money, but your data. That could be very disastrous. Today, we are talking about AI. So someone can use AI to create a face that looks like yours and can impersonate it. Is that right or wrong? And that is happening in the cyberspace. That is happening in everyday banking. So the issue of ethics isn't going to go away, whether it's on technology or finance or just human rights. The issue of ethics is crucially important. One that we need to constantly educate ourselves, constantly strive to achieve what is right.
Fantastic. Well, just before we go back to the hear the final results of the quiz, let me just ask you a couple more questions. Some of the banking sector terminologies. So we have things like NPLs. What's an NPL, and in practical term, what does it mean?
Okay. So when we say NPL, it means non-performing loans. This is typically when a customer takes a loan and the repayment is not coming as expected. And we'll classify a loan as non-performing when the customer has not paid after 90 days. Normally there are categories. We have the substandard, we have the doubtful, and we have the loss. And I'll say that for banks, before you get into those categories, you should have a watch list where you will be able to monitor the performance of your loans even before they get into that categorization. That's what I have to say.
Okay. What's a CRR?
CRR is cash reserve ratio.
Cash reserve ratio.
Yes.
Okay.
Basically, how much, if a customer puts money in the bank, let's say 100 cedis, how much of that must a bank keep with a central bank, right? And that today is linked to how much loans are you creating. So there are tier levels of that. Usually it's a regulatory requirement for banks. Yes.
So it's more technical.
I would say it's more technical, but also common sense, which is to say that if I put my money in a bank, the central bank must do something to protect me. So it may sound technical, but it's actually in the interest of the customer. Yeah.
I think that normally whatever it is cash reserve ratio the banks keep with Bank of Ghana, they cannot lend from that.
Okay. All right. Fantastic. Well, I was going to ask you one final one, but I think it's time for us to go. KYC.
Okay.
Quickly, KYC.
So KYC is know your customer. It is the way and manner the bank identifies or verifies the customer's identity. So we do that when we take your ID card, we take your proof of address to confirm that you are really who you say you are.
Okay.
Yes.
Okay.
Thank you.
All right, so with that, let's join the quiz as it's in progress now. We are about to find out who won the final round.
The champions of the day are. We'll take you through the results from the case study that was given. So, starting with UG. So, the first question on identifying the 4 primary root causes, they were able to give us 3. So they got 1.5/2. The second question on 4 on ethical, here too they gave us 3, so they got 1.5. Then on question 3, 4 risk associated, they were able to give us all the 4, so they got full marks. Then question 4, explain how any 4 on ethical lending contributed to the collapse. And they were able to explain 3, so they got 3/4. Then number 5, explain how reputational risks translate into liquidity. They were able to explain it, so they got a full marks. So this gives UG a total of 13/15. Now I come to UPS. So UPS, the first question on root causes, they were able to give us all the 4, so 2/2. Second one, 4 on ethical, they were able to give us 3, so 1.5 here. Any 4 risk, they gave us 4, so they got a full 2 marks. Then explain how any 4 on ethical contributed to the collapse. Okay, so that's, instead of the 2 marks, they got 1 here. And then the final one, where they were supposed to explain how reputational risk translates into liquidity, they also got the 2 marks here. So in all, they had 11.5/15. So, UDS, 4 primary root causes. They were able to give us full 3 of them, but the last one, they just mentioned non-performing loans without adding whether it was hidden. According to the case study, it was either hidden or unreported. So that gave them 1.75 for this over 2. Then question 2, on ethical practices, they got 3, so 1.5. Question 3, any 4 risk, they were able to give us 2 of them, so they got 1/2. Then explain how any 4, the unethical contributed to the collapse. Here too, they were able to explain. So they have 4/4 also here. And then reputational risks translated into liquidity risk. We didn't ask for any numbers. So they were able to explain and they got their full marks. So they have a total of 13.5. Yes. So at the end of round 3, the third school is University of Development Studies with 26.5. 26.5. Then UPS comes second with 29.5. So now, all right. And the obvious champions and winners of the second National Banking and Ethics Challenge. Okay, we started this journey yesterday, and today they've come on top of all the 12 universities that participated. We have a total of 35 first position. University of Ghana. Right. So, ladies and gentlemen, these are your champions. All right. So, congratulations. Congratulations, University of Ghana. Okay. So, I'll just say thank you on behalf of myself, quiz mistress, to say thank you all for staying through. All right. So at this point, you can take a picture. Can you take a picture of us then? No, the winning team. Okay. Thank you. You can sit down.
The National Banking and Ethics Challenge and 2026 edition. The University of Ghana, Legon, has won this competition this year, followed by the UPSA and followed by UDS. So this is how we wrap it up with our broadcast here from the Chartered Institute of Banking Ghana, right here in Oponglo on the Trinity Avenue. My name is David Kwekusechi. We'll return to regular programming.